Good morning, everyone, and welcome to the morning market review. Today is Thursday, it's the 8th of June, 2023. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address, arthur@fxcm.com. Just going to go ahead and bring up our disclaimers. We'll start off with a high-risk investment warning. Can I just double check that you guys can hear me? Just want to test the Okay, cool. Hey, Zanetta, good morning to you. All right, thanks very much. Hey, Derek, morning to you. All right, let's bring up the market commentaries disclaimer. I'll keep this on screen for a few moments as well. All right, and here is our references, MarketScope 2.0 and TradingView.com. All right, let's go through to MarketScope first. Again, let's take a look at the dollar, which is the first instrument to analyze, because in my opinion, it's the first link in a chain, and what happens to the dollar tends to ripple out. And I just want to take a look at the dollar again. Now, what we said yesterday is that there is a fair amount of uncertainty in the US dollar, and why I say that is take a look at this candlestick. Is what we call a spinning top. Bulls have tried to take price up for the week, bears have tried to take price down for the week, but by and large we are moving in a sort of sideways flattish direction. And the fact that the dollar is showing signs of uncertainty is introducing ambiguity and whipsaws in the actual trade. If we go through to the daily chart, you can see that we are still trading in no man's land. Still trading in no man's land. And if you take a look, let's just bring in an arrow here at the last three candles. So there's Monday. Okay, there is Tuesday and Wednesday. What kind of candles do we have? So we've got a very long upper shadow on Monday. So it seems as if the pressure is to the downside. But then we've got a very long shadow yesterday, a lower shadow, suggesting that the pressure is to the upside. And what have we got right in the middle there? Well, we've got a spinning top. So the last three candles just highlight how difficult the trade has been over the last 3 days. And then if you take a look at today's candle is, again, we're starting off with that inside day. The bulls are not prepared to take price higher than yesterday's high, and the bears haven't yet been able to wrestle control away and take price lower than yesterday's low. So we've got an inside period to start the day. Now, what was interesting is that the Bank of Canada surprised yesterday with a 25 basis point hike. The idea was that they were going to hold. This is the second surprise in the last week. We've basically seen the Reserve Bank of Australia also surprised with a 25 basis point hike. And the question is, what does that mean now for the Fed? Is the Fed going to surprise with a 25 basis point hike? And the Fed effectively is next week. We're going to get the Fed out next week. And if it is going to surprise, what does that mean for the greenback? All right, so let's just take a look now at TradingView. All right, so what we've got here is the US 2-year. This is the US 2-year yield, And I like looking at the US 2-year yield because it's effectively a proxy for monetary policy. We can get a fairly good idea of the bias for monetary policy by taking a look at the short end of the yield curve. And that's because the short end adjusts quickly as the costs of capital effectively are changed. And you can see we've got this higher trough followed by the higher peak. We've got the US dollar underneath, and then we've got the correlation coefficient between the two. Well, the correlation coefficient is fairly robust. It's at 63%. In other words, there is a positive relationship between the 2-year yield and the US dollar. The fact that we have an uptrend in the 2-year yield perhaps suggestive of the fact that the US dollar perhaps gets pulled up, and I just wonder if there is going to be some sort of surprise on the Fed side as well. At the moment, the market is pricing in about a 65% chance that there's going to be a hold of interest rates. So there's roughly about a 35% chance that there's going to be an increase of 25 basis points. We've seen 2 surprises to the upside. Bank of Canada, Reserve Bank of Australia. Okay, so the idea here is the Fed has now got a certain amount of leeway to surprise. Now, let's just take a look at the inflation on the Australian side, the Canadian side, and then the US side, and see if it gives us any clues. Okay, so what we're going to do here is we'll close this, we'll close that. Let's go ahead. Let's put in Australia core CPR. Okay, we'll take a look at it on a year-on-year basis. Okay, so this is, we're just going to make an adjustment here. What we're going to do is we'll add the rate of change underneath. Because this is a 3-month, it's looking at it in terms of, it's not a monthly chart. It's this is changing every 3 months. Let's put in a rate of change. Yeah, what we're going to do is we're going to do a rate of change. We're going to make this an annual rate of change, which is 12 months. But because we're looking at it on a quarterly basis, we're going to divide by 3. Okay, so we're looking at this over a period of 4, a rate of change of 4. I hope you get the math there. 1 year, 12 months, divided by 3, divided by, and then we get the yeah, 12 divided by 3 gives us 4. Okay. And then what you can see is the rate of change is moving towards this 0 line, but there is obviously a worry here because the inflation in Australia is increasing. It's increasing at a decreasing rate, so it's moving towards the 0 line. It's increasing at a decreasing rate, but it's really got to get below 0 and show signs of deceleration. So I think in this type of environment, perhaps the surprise, not that surprising. But then let's take a look at the core inflation on the on Canada's side and on the US side. So let's now go through to Canada's core inflation. Now take a look. It's also on a quarterly basis. Take a look. The rate of change is actually in the deceleration side. So I'm actually quite surprised that the Bank of Canada, let's just fix this up. We don't want a background there. Okay. So I'm quite surprised that the Bank of Canada did go ahead with that surprise increase, because the rate of change is showing some signs of deceleration. But it just goes to show how worried the Bank of Canada is that inflation is proving to be sticky. Okay, so it's a slightly different situation than Australia. Australia increasing at a decreasing rate. Canada is in the deceleration side, still worried about that inflation coming in with a 25 basis point hike. Let's take a look at the US side of inflation. Okay, and you can see that on a 3-month basis. Okay, so this is a chart. It's not a monthly chart, it's a 3-monthly chart. You can see that the deceleration here is not as comfortable as on the Canadian side. In fact, it's kind of hinged and is moving upwards again and seems to be heading towards the positive side. I think that the Fed is in a very precarious position. The market is positioning for a pause or a skip. There's a 65% probability that there's a pause or a skip. But given the precedent set by the Reserve Bank of Australia and by the Bank of Canada, we cannot discount the fact that there may be a surprise. And if there is a surprise, that's very much been reflected. Let's go back to the US 2-year yield. It's very much been reflected in the fact that the 2-year yield has got this higher trough followed by this higher peak. And when we add in the US dollar and the correlation coefficient, it does suggest that there is some support for the dollar here. If that is the case, let's go back to the US dollar and let's take a look on the hourly and see if there are any clues to dollar traction on the hourly. And what we need to see here, if there is going to be some sort of response by the greenback, we've got to see a bullish crossover on the EMA. So we've got to see the green cross above the orange EMA. At the same time, we've got to see the stochastic cross positively and move towards the upper quintile. Okay, so those are the requisites for the market to start anticipating that there is a distinct possibility that the Fed could price the upside and the dollar would need to adjust and reprice that in. So let's keep an eye out on the central pivot here. The central pivot is obviously where the support is. Do we get any traction? Let's take a look and see what's happening on the euro side of things. All right. The euro here, if we get a positive cross on the dollar, and that would be, I think, indicative of the fact that the market now is starting to anticipate potential surprises in terms of the interest rate decision, then we've got potential resistance here. So I would keep an eye on the R1, which you can see acts as resistance over there. And the fact of the matter is we're getting some sort of resistance just over the last 2 hours over here. And I would see if the if the euro US dollar gets a bearish crossover here. So let me just go through the hypothesis that's been built here. Bank of Canada, surprise to the upside. Its deceleration of inflation was less severe than what's happening with the deceleration in Canada is more comfortable than the deceleration that's been seen on the US side of inflation. Given that two banks now are expressing extreme worry by surprising to the upside, one would be forgiven for thinking that the same would happen on the US side of monetary policy. That being the case, there might be some sort of support for the greenback. If there is some sort of support for the greenback, then is there going to be a negative cross on the euro? So we've got to see a negative cross on the euro on the trend following exponential moving average side. We would need to see a bearish cross on the stochastic as well. We haven't really seen either that. We're sitting in no man's land at the moment. So again, the fact that we've seen an uncertain candle on the dollar filtering through to making trade very difficult for us indeed. Let's just take a look and see what the candlesticks on the US dollar, I beg your pardon, on the euro are suggesting. And you can see that the euro candlesticks are showing uncertainty as well. Take a look at last week's candle. Last week's candle, spinning top. Bulls try to take price up, bears try to take price down, neither succeeded. What's happening this week? Bulls trying to take price up, bears trying to take price down, neither is succeeding. Moving sideways, we've got a spinning top followed by a doji, and this doji is an inside period. It's inside the range of last week. So there is a tremendous amount of uncertainty in the Forex markets at the moment, which is represented by the weekly charts on the US dollar and on the euro. If we go through to the daily chart, it does seem to be some sort of bearish influence. Why do I say that? Because it's in our lower channel between the lower blue and the lower red, okay? But the hourly chart is yet to give the timing signal. So the idea here is that the bond markets are selling off as interest rates are starting to move up. Theoretically, according to the correlation coefficient, dollar should be supported. If the dollar is going to be supported, then we got to watch for the crossovers here in euro US dollar. Let's just take a look, see what's happening on the cable pairing as well. Okay. Similar to euro, it's sitting at the central pivot. Is that central pivot going to act as resistance? If it's going to act as resistance, we need to see the crossover of the EMAs. That would be the green crossing below the orange, developing angle and separation to the downside. At the moment, stochastic is in no man's land. There would necessarily need to be a crossover to the downside, moving back towards the lower quintile and holding. So the idea here is I want to see if there is going to be support for the greenback, given that the fixed income markets are showing signs of a pull up in yield, a decline in price, and the fact that two central banks have already surprised with 25 basis point hikes. Is the Fed potentially now going to be start to be priced in terms of a potential hike as well? All right, if there's any questions, please go ahead and type those in. Any questions? Go ahead and type those in. All right, nothing coming in, so we'll wrap up over here. Thank you very much for joining. Much appreciated as always. Have a good day ahead, a good evening ahead, and let's have another chat about this tomorrow morning. Thanks very much, guys.